Last week's explosive price movement has pushed Bitcoin for the first time in a long time into potentially a weekly and a daily bullish trend. But we want to identify if right now is the opportune time to buy or if there is more pain and chaos on the horizon. Stay tuned for today's episode of Breaking Bitcoin. Welcome back to today's show. Thank you so much, everybody, for attending. As always, if you guys have any questions, feel free to drop them in the live chat as we proceed to this. In today's episode, we're going to be going over exactly what last week's weekly close means for the weekly market structure that we've been mapping out, exactly what the progress is of our current active regular bullish divergence counter trend long trade that we took almost a month ago today, and now we're in nice profits on. What is the status of pathways to profit? Where are our trading strategies currently pointing at what the market should do? And what do we see on the horizon, as well as your chart requests, reviews, and questions answered as always. If you guys enjoy the content, the subscribe button is down there right next to the like button. Let's get cracking. All right, so we've got a good show for you guys today. Obviously, last week's explosive price action was very exciting. We are going to start off as we are wont to do on the weekly time frame and looking at Big Daddy Bitcoin, as it is the arbiter of everything that happens in the cryptocurrency system. If you're looking at other cryptos before you look at Bitcoin to get a read on what the market's doing, I think you're making a mistake. So let's break this down. So from September of 2021, or actually, excuse me, I'm kind of mixing my dates up here. So we could consider the bear market established when the Tenkan-San leading line of the Ichimoku cloud on the weekly time frame was breached and traded underneath. That occurred on December 6th, 2021. So we're about a whole year and a month plus a week past that date. And we've seen pretty much nothing but down only. A very short-lived bear market rally here in the spring of 2022, slapped down by the Tenkan-San leading line, and price has been just lifting lazily down to the right ever since then. Brief bear market rally, and again, just very extremely weak. We've had periods of violent rejection followed by weak uptrend, violent rejection, weak uptrend, violent rejection. And now for the first time, we've seen an impressive weekly candle. This is the most impressive weekly candle that we've seen since back here and again in that spring rally of 2022. And prior to that, we hadn't seen one before that until kind of the beginning of the second leg or the exhaustion leg of the bull market back in the summer of 2021, when we did reach up, make a new all-time high. And well, you guys know the rest of the story up until this point. So last week's weekly close was interesting. Bitcoin put in an astounding 21.86% weekly candle looking at the Binance chart. So this is incredible growth. This is the most explosive growth that we've seen out of Bitcoin for a year, and momentum cannot be ignored. All right, we don't want to ignore momentum. This is an impressive movement. This is a very impressive movement. But we have to look at this analytically. We have to look at this objectively, and we have to do our best to suss out any possible danger or red flags that we would see when we're looking for what positions we want to take. And we want to think objectively about exactly in what direction we want to trade and where the best risk to reward opportunities lie. All right, and we need to look at this from a couple of different lenses. We need to look at this from the lens of an investor, of a trader, a swing trader, let's say, and a day trader, because many of us who are engaged in the cryptocurrency trading activities to some degree partake in all three of those activities. And so each of us might need unique advice because it's very hard for people to specialize sometimes, even though that's what all the experts recommend you should do to be successful. Moving right along. Okay, so for the first time, so since September 2021, we have not seen our moving averages, our major moving averages, nor our Tenkan-San leading line actually trend upwards. As you can see, since, let's see here, March 22nd, so again, right at the end of that brief spring bear market rally, our moving averages did, or at least our Tenkan-San stopped moving up, and our moving averages stopped moving up for the very last time, and they've been down only. Our moving averages on the weekly time frame have not crept up whatsoever at all. Have not crept up whatsoever at all since the spring of 2022. So for the very first time, we're actually starting to see a very positive upward slant from our moving averages. Now, this upward slant began with last week's candle, and it'll become more impressive if this weekly candle does not give back everything. If this weekly candle gives back everything, then this is going to flatten that curve out and make everything that I'm kind of excited about right now invalid. So I'm hoping that it doesn't do that because I don't want to look extremely stupid, but Hey, Red PQ, welcome to the live stream. Thanks for attending, my friend. But trading is not about being right. Trading is about being profitable. You can either take trades with utmost conviction and pray for the best, or you can be absolutely willing to reevaluate your ideas, beliefs, and thoughts based on the evidence that is in front of you. That's what, in my opinion, what makes a successful trader. It requires an extreme amount of self-knowledge, of humility, and the actual desire to learn and be results-oriented. Many people approach trading and they desire to be right. They are filled with ego, and for that very reason, they struggle in trading because they hold on to positions they shouldn't, they take positions when they shouldn't, and they're not willing to amend their positions when the data suggests that they should. So this is why my recommendation to individuals is to build an objective mechanical strategy as the very first thing they do in trading. That will create in you the ability to become consistently profitable. And then as you're able to do that and scale that to a larger and larger degree, your experience will grow, your knowledge will grow, and you can begin taking discretionary trades. But in my opinion, 99% of traders who jump into discretionary trading fail because it is very hard to control your ego. And only by managing an effective and consistently profitable mechanical strategy will you engender the discipline, patience, and skill set necessary to actually be able to trade successfully discretionarily. So I digress. That's my wheelhouse. For more information, this is the kind of stuff we cover in our premium trading group all the time. Links down in the description if you want to get involved in our community. So on the weekly time frame, we've now blasted above the Tenkan-san leading line and the 21 weekly exponential moving average, which have been very indicative of the bear market up to this point, letting us know that there is a potential. It's much too early to call it now, but there is a slight potential here that the bear market might be over and we're moving up to new territory. Do I think that's what's going on? I don't. I think that our most logical possibility here is that we reject somewhere around here, or that we do rise to my ultimate weekly regular bullish divergence target of about 24,000, 2,500. Shout outs to Alex for helping me pinpoint that level. And then seeing rejection there and potentially lower lows. And while that sounds logical, and while that is the game plan that I'm prepared for, again, the end of markets is always surprising. And you need to be, going back to my earlier point, you need to be able to open your mind and reevaluate what you're doing based on the evidence in front of you. Let's switch scenes here. There we go. Scene shifted. And we'll scoot out over here so you guys can see the big picture. All right, so we've got the big picture here. All right, so we have been in a weekly trend up until now. We are now experiencing potentially a weekly trend shift up to the upside. What does that really mean, though? What action should we take based upon that? Well, it means that on lower time frames, where we're actually trying to identify trades, we should be more open to emphasizing risk and emphasizing paying attention to positions that are signaling for us to go long. All right. So big picture here, weekly trend shift here is potentially exciting. I'm not fully convinced. I am overall still going with the master plan here of waiting, of considering this as yet a bear market rally. What would make this not a bear market rally? What would make this not a bear market rally? Hey, Pedican, thanks for watching on Twitch, my brother. What would make this not a bear market rally? What would make this not a bear market rally is if there's multiple ways, and every analyst would tell you something different. But for me, we need to take out this high first, right? This previous high. I don't really consider a shift in trend until we actually break above a previously established lower high in this situation. And then we need to come back and form a higher low. If we form a higher high for the first time, which we haven't done yet, and then come back and establish a higher low after forming the higher high, then you buy in on the higher low. Or if you're really conservative, you wait till you go back up and then you take that breakout. Now, with the volatility of Bitcoin on the weekly time frame, you catch big movements, but you miss out on like 20-30% usually when you're that conservative. So I'm a little bit more aggressive, but that's what we got going on. Looking for rejection at the 200 simple moving average here on the weekly time frame, and then either we see a lower high, or excuse me, a higher low, and we go for it again, and we play the breakout at that time. Either way, we would play this higher low, or we still take the short at the rejection, and we actually go down, break down below 16,200, and we move down toward my ultimate downside target for this bear market rally, which, guys, I've been saying this for a little under a year now, 12 to 13,000. That's based on data from Glassnode and on-chain analysis. Evo, thanks for coming to the live stream, my brother. All right, so let me know your guys' thoughts and opinions on that overall. What does the weekly chart say to you? What experience have you had that you could possibly share with me on your past bear market experiences? And how is the data that I'm presenting now, or that I'm not even considering, influencing your decisions? So what are the key questions, as you guys are thinking of those questions, what are the key takeaways you should take away from this analysis that I just pointed out? One, you want to be able to question your previously held beliefs and assumptions about the way that the market will move. The market is inherently random, and you will not be able to accurately predict with 100% accuracy what is going to happen next. The position of a trader is to set them up in consistently profitable positions by taking the most strategic bet and practicing sound risk management so that they don't get themselves in trouble when they're not wrong, but also so that they make sufficient money when they are right. Okay. Can't be so conservative that you never lose money when you lose, but that you don't make money when you win. You do have to take a certain amount of risk. That's how this game is played. Okay. So moving from weekly trend to weekly reversal, what are the opportunities here? Are we overextended, underextended? What is the situation here? On the weekly time frame, again, the Bollinger Bands are beginning to expand very slightly, not very significantly though. And we do have a high opportunity, or excuse me, a potentially high value situation here where, of course, we are showing regular bullish divergence on both our PPO Laguerre, on both the wave trend oscillator, also our proprietary indicators as well that we use for our trading strategies, such as Minx and time transformation. Those are all printing regular bullish divergence. We're all printing regular bullish divergence throughout this consolidation period, where we did take our weekly counter trend reversal longs that we're currently in. We have hit our first take profit in the premium trading group for that weekly reversal long. And yeah, Red PQ, you got, your mind is right where mine's at. And the Great White Shark, thank you so much for coming on to the YouTube live stream, my friend. Okay. So we're still playing out that regular weekly bullish divergence. Keep in mind, this is, as so far yet, a bear market rally. I hate to sound like a negative Nancy, but it is the situation. And so what's likely to happen when we actually get to an overextended area in a bear market rally? Well, generally, market participants will use that exit liquidity from euphoric retail traders to actually offload positions. Think about the fear, uncertainty, and doubt for cryptocurrency investors who were kind of on the sidelines. And they sat through, like, maybe they sat through the bear market. Who knows when they bought in? Maybe they bought in at the top. Maybe they bought in this consolidation period. Doesn't matter, but they're getting into cryptocurrency. They're probably experiencing loss. And then this week happens. This is the week of the FTX collapse, when crypto is exposed as a Ponzi to the larger world, and Sam Bankman-Fried and everything. And these things have knock-on effects. So we experienced in that week a 22% downside in 1 week, sending Bitcoin down here to the depths of El Diablo. And now we've rocketed back up at a 22%. So this means that any speculators who were holding at this price level, who experienced a 20% loss, are now getting the opportunity to sell at cost, break even, or a slight profit, depending on where they bought exactly. And I mean, do you think, like, what, 2 months is enough to restore faith in the cryptocurrency economy for these sideline speculators who really aren't in it for the tech or for the world change? They're in it for the money. I mean, I don't think so, right? Like, these things do have profound implications. On the other hand, we could argue that you buy when there's blood in the streets. And this was kind of the last point of supply. And this is what we'd say if we look back, if this is the end of the bull market and this is the beginning, or excuse me, if this is the end of the bear market and we come back in like 3, 6, 9 months and this was the bottom, we're going to be like, well, of course that was the bottom, because the FTX collapsed, nobody wanted to buy. And so, price only had one place to go. So again, things you want to think to yourself before you think that you are right with your analysis, right? We're here to find profitable opportunities. Okay, so Getting back to the trend, regular weekly bullish divergence playing out. Let's actually switch back to the split screen now for the rest of this segment. Regular bullish divergence playing out on the weekly. I'm a little tentative about what will happen if we broach the upper envelope of the Bollinger Band here and get slightly overextended. Usually when we breach the envelope of the Bollinger Band, we will retrace and test the middle line before advancing or shifting trend or reversing the trend. So in this case, let's say if we were able to trade up into the $23,000, $24,000 mark, right, which is very logical and in line with our trending targets, pull back, come back to about the $18,500, $18,600 price level, kind of freak everybody out. And then if this is going to have another advance, that's where the advance would likely begin. And if we have the shift in trend there, that breakdown of that price level would let an individual know this is how I would play this. I would short at about 24, 25,000 or using the daily to time when price seems overextended, hitting that period of weekly resistance. Take the short, watch for the pullback, and then depending on, take some profit at this 18.5, 18.6 mark. And then depending on what happens, do we stop bottom and we see a pretty good buyback? I drop the short and get long, looking for another expansion or another leg of the bullish trend. If we break down and there doesn't seem to be any significant buying, then I would probably re-add to my short position and then be positioned for that movement down to 12 to 13K. I think that's the way that we want to do these things. Okay. All right. And hello to you, Kyle. All right. So weekly reversal chart. We're playing out regular bullish divergence. We don't seem to be significantly overextended to the downside or the upside. We are now in the middle of the Bollinger Band channel, trading actually to the upper boundary of it. And we're looking at potential break of that envelope, hitting 24, 25,000, rejection, pullback to 18.6, buyback or not, if not taking the short, compounding. If so, buyback, dropping short, going long for another leg of the bullish trend. So again, ask the audience time. What do you guys think about that segment of the analysis? Are you seeing anything from a big picture weekly reversal market structure perspective that you think I'm missing? What do you like about the analysis that I've just put out? What do you agree with? And what actions do you think you would take in your own personal trading based on this analysis? While you guys are formulating those thoughts, okay, yep, that's good. Yes, while you guys are formulating those thoughts, of course, 30 seconds for self-promotion. Thank you guys so much. You guys are enjoying the content. So did this test group of audience members. They loved the brand new book, The 5 Mistakes Holding You Back from Profitable Trading. This is an absolutely free guide that I've put out. It's available publicly. I am tired of seeing people make the same mistakes over and over and over again, and I get asked the same questions all the time. This comes up in my mentoring. This comes up in our live streams. So I've compiled this guide, link down in the description to learn the 5 mistakes holding you back from profitable trading. Guide's completely free. Download it, improve your trading today. And please give me some feedback. What do you like about the book? And how can I improve my next books and guides moving forward? All right, with that, let's get back to the analysis. And we're going to go to the daily time frame. And for this, let's switch over to the big picture. Really working the stream deck today, I'll tell you what, man. Okay. Daily time frame. And we're going to start off with our trend detector here on the daily time frame. All right, so daily trend here is pretty exciting, actually. I mean, we've had this beautiful daily bullish break here, trading above all major moving averages, trading above the Ichimoku cloud, successfully completing the edge-to-edge cloud, and then overgoing what I had originally anticipated. When we broke in, I was anticipating kind of that edge-to-edge trade. Although I was tentative about it, I'm always tentative about kind of bullish breakouts in the midst of a bear market. And now we find ourselves with 2 days of consolidation. All right. We had a kind of a nice up day on Saturday, which was surprising, and then a little bit of give back. And so far, not so bad. But honestly, nothing really amazing. This area of the market, even though today's daily candle looks okay, we really had nothing but distribution. And we'll see that when we go down to the lower time frames here. But this is exciting. Break of market structure, break above all our major moving averages, break above the Ichimoku cloud. What does that mean? It means previous resistance might be viewed as now current support. Thanks, Peckham. Good to see you in here, brother. So when we are looking for daily support, we can begin looking for these levels now. Shoot, I deleted them. It's okay. All right. They're not too hard to see. Okay. So two important areas. We have the top of the Ichimoku cloud, which did act as support previously. That's now kind of dropped itself down here to the 19,150 level, which was my original target on this Ichimoku edge-to-edge cloud trade. And then we have the 200 daily simple moving average, which is coming in around 19,500. So a pretty wide zone, about a $500 price zone. But this is where I would be looking to buy pullbacks between 19,100 and 19,500. In the event we get the beep boop bop, where we get rejection from this current area of price, and then price comes down as a pullback, establishes a higher low. And then again, very much in line with what might happen on the weekly time frame. Let's say that happens. Either that could happen and then we charge to 24 and then pull back more significantly to the 18.6, 18.5, or we'd continue to charge and then pull back. And this is where we pull back on the weekly time frame potentially. And then again, same rules apply that I mentioned previously. Either we look to compound on our short at that time if it does not appear that we get a buyback, or if we do see a significant buyback, we commence with long, pullback long. No problem, Evo. I'm happy to please, my friend. This is what I enjoy doing. I do it every day. Might as well go live and do it because, hey. And by the way, that's totally okay. These are kind of treacherous areas of the market. And the worst thing you want to do is jump into a situation where you feel uncomfortable and not incompetent, but not competent enough to make you comfortable in the situation. And you end up losing more than what you had intended. We're in this game to make money. We're in this game to be profitable. And this is why I really highly advocate for people to build those mechanical strategies, either using my methodology in the Pathways to Profit course, or finding their own way to build a mechanical strategy that works for them, that they feel comfortable with and confident with. Let's see here. Other things to point out here. Okay. Not too much. Nice daily. Above all major moving averages, giving us a bullish daily trend, which means not only on the weekly, but also on the daily, we want to favor going long on pullbacks and looking at those opportunities. And those pullbacks would be quite extensive at this point in time, down here to about 19.5, 19.1. So key takeaways, current daily bullish trend. Don't get too excited, but that's what it is. Current daily bullish trend, meaning as a trader, I would emphasize looking for opportunities to buy pullbacks or take breakout trades. We're going to break down breakout trades here in just a little bit. I'm going to explain to you guys how to take breakout trades. Okay. So now let's go to our daily reversal system and see what our reversal opportunities are. As you guys will notice, for the first time since right here prior to the FTX collapse, right on this initial almost move down, then we had a little fake out and then the movement down here for the FTX collapse. You can see here that the PPM Laguerre indicator flashed red for one day, and we are now in our second day of red flashing. Okay. No confirmation on this movement yet because we actually haven't gotten any sell-off. We haven't gotten a red, either bearish engulfing candle or any kind of significant daily reversal. But as we could see, especially on today's current bar, we haven't been able to make any significant progress on the daily. Yesterday's candle was an inverted gravestone doji, and today's candle appears to be currently a spinning top doji, although we are currently selling down right now. Warning signs on the PPM Laguerre, and we do have our momentum oscillator in a pretty significant overbought territory here. But again, no confirmation yet. So more risky traders could look to go ahead and take the short at this position and use something like Quadriga ATR, which is one of our proprietary indicators, to take that short with proper risk management. Or if you're a little bit more risk averse, which there's nothing wrong with that, wait for the opportunity to see some confirmation on the daily before looking to take price back down to those levels. So what are those levels per se? Well, we've already talked about them earlier with the daily trend status indicator. But we also have our middle Bollinger Band. If we wanted to be really negative, we've got that 17.5. So we're not even going to really super consider that because we do have to give precedence to those other more significant moving averages here. But just note that we've been trending above the Bollinger Band. So one common strategy would be to wait using this system until price closes back down inside the Bollinger Band envelope and then consider that rejection. If you wanted bonus points, you'd do it with Heikin Ashi, but on the daily time frame, Bitcoin moves a little too fast for that. So in general, you don't catch those movements. Okay, so again, key takeaways. Bitcoin in the daily has not been able to make any significant progress today. We are overbought on our momentum oscillator. We are flashing warning signs on our confirming reversal indicator. No confirmation yet to directly justify me to kind of shout for the heavens that a short right now is profitable. However, I will just say that strategically and logically, trading the dominant direction of the previous trend and looking at the extension of today's current market, this is a zone where shorts seem to be profitable. We finally have an area where price has not been able to make significant progress. The trend seems to have paused or subsumed. And so identifying or looking for a reversal opportunity here does make a whole lot of sense. And I'm going to show you how to quickly invalidate yourself in the sense that you don't get caught up if price breaks out. We're going to break that down here in just a second. So again, what takeaways do you guys have from looking at this area of the market? Does the market seem overextended to you? And what opportunities are you looking at in light of where price is for Bitcoin anyways, with regards to where it might go? Are we overextended? Are we going to reject? And what are your thoughts on that? Love to hear you guys' comments and opinions in the live chat. And now, the moment you've all been waiting for. The moment you've all been waiting for me to take a glance at the live stream. Again, as always, shout outs to Red PQ, Pelican, Evo, The Great White Shark, Kyle, Peckham, Evo, Ron Legato. Thank you guys for joining me and giving me a little bit of your Monday. Always appreciated. Ron Legato is waiting for a pullback, but I'm also getting pissy about how much cash I totally understand that. So again, this is something that I recommended earlier. And what I'm doing personally as a trader in these areas, since I know that I am not going to be able to know for a fact when the absolute bottom is in, because I have to manage my capital effectively, bankroll management, what I've done as a personal investor is I have increased the amount of my weekly dollar cost averages. Every week I buy something to hold in my long-term portfolio. And currently it's Bitcoin and Ethereum. So I have begun to increase the amount of my dollar cost averaging for Bitcoin and Ethereum as we continue out throughout this bear market. It is Monday, my brother. Yeah, so Ron, that's kind of an interesting concept. I know that there are individuals out there who are doing lots of tax advantage strategies with cryptocurrency. There's all kinds of options out there for you. Definitely something I would be interested in taking a look into and seeing if we could come up with a actionable strategy that would benefit members of our community. All right, guys, we are going to do one more thing here. And we're going to go down and look at the intraday. And we're going to remove our indicators. And I'm just going to point out to you guys kind of the lack of impressiveness of the current movement. So since we peaked up here on Saturday, we've essentially gone sideways. We've had lots of intraday volatility. Lots of individuals getting wicked out, and this is where range strategies have just come in fantastic, have come in very handy, right? Trading ranges on something like the 15-minute time frame or the hourly, there's been lots of profit, just buying oversold, selling overbought, buying oversold, selling overbought, or vice versa. But just trading both ways of the market, and that's what we're currently doing. And here's the thing. The two types of trades that I'm watching out... Oh, shoot. Sorry, guys. I didn't switch the scene. There we go. The two types of trades The two types of trades that we've been executing on the intraday since Saturday has been, once we kind of noticed this reversal coming in, which, and again, one of the ways that I identify that anyways, is whenever we've put in a big movement and then we start putting in big wicks on other sides of the market, that lets me know that we've now pretty much established a range, okay? We've now pretty much established a range. And until I see some pretty significant break, sorry, I drew these lines wrong. Let me actually draw them how I would draw them so you guys can see exactly what I mean. Candle closes, or the level of a candle close, is significantly less important than the high or low of a candle, because the high or low of a candle is where the people that matter actually are. So, okay. All right, so there we go, the highs and lows. So if we're in a trend and then I see that price basically starts putting in big wicks on either side of a tight range, that lets me know that we're currently in a range and I can activate a range trading strategy. So easy one, get something like the RSI. And come down to like the 15-minute and buy oversold, sell overbought, buy oversold, sell overbought. And again, is it so simple? Yes, it's very simple. But again, good trading can be as good, it's as hard as knowing what is the right strategy at the right time. So throughout all of this, your whole RSI strategy would have sucked. So knowing when and where to execute a strategy is important. I think this is why people, I'm in like the algo trading subreddit on Reddit, and people there just whine and cry all the time if anybody talks about how they have a profitable strategy, because they're like, well, your strategy is not going to work all the time everywhere. Right. You have to be smart enough to know what you have to do, your homework. You have to do a lot of back testing to see what types of strategies tend to work well in what environments. What do certain environments look like? And you're never going to be right 100% of the time, but you're going to be right enough, and you're going to be right most of the time. That's the point. And you're able to reduce your losses when you're not right. Let's see here. Evo says, feels like a retrace next, but BTC could always surprise and climb. Jean-Remy Osorio says, up only. Killicon asks on Twitch, do I currently have any open positions? I do. So I've had my weekly reversal regular bullish divergence position open for a little over a month now. So we opened that down here in this consolidation area. That's doing good. We've already taken 50% profit on that trade at about 21,000. And then on the daily, we took a trade on the that's not right. On the 7th. Sorry, yes, it was the 7th. We took a trade on the 7th. That was our daily trending strategy that activated. We got long. We closed that trade out between 17 and 19, and that trade's closed. So wasn't able to profit off this last meet of the movement right here. Played this range of the movement right here. Took about 5 trades over the weekend using essentially that same strategy that I just showed you guys. On the 15-minute time frame, I use my ISA spot. It runs automatically, but I turn it on and off. So it's still on right now, and I'm actually in a short as of this moment. So that we just opened up right up here in these overbought conditions. So what are we looking for? If we're looking for price to go up only, then we're just looking for a breakout, right? When price is trending aggressively like this, you want to be pretty aggressive with your ability to catch breakout trades. So what do we have? How do we catch a breakout trade? Well, I'm so glad you asked. Well, we've got a currently established range high. So if the hourly closes above this, we go long. And if it doesn't, we hold short until we get oversold. And I don't want to sound arrogant, but it's really kind of that simple, right? Overbought, oversold strategies work good in ranging markets. Trending, wide stop loss strategies work good in trending markets. And at the moment where you anticipate or believe that you're in one or the other, you should adopt that strategy. So we've shifted currently from trend to range. So we're going to optimize range strategies. And then if we get a breakout, we're going to assume that we're switching back into trend strategy and go that way. But currently we're holding short here on the hourly, playing this range, and actually, as always, prepared for slightly lower prices. Yeah, Gene's like, yeah, man, we're going up. Crazy potential, and everyone's sleeping. Good to see you too, man. All right. So pretty good times. That's getting close to what I have for you guys today. So we've gone over a lot. We went over the weekly trend, the daily trend, the hourly trend, and everything in between. So as always, let's shift over here and do our farewells, goodbyes. Thank you guys so much for joining me for another exciting episode of the Breaking Bitcoin Market Update. As always, if you have any questions, comments, concerns, sarcastic remarks, hot stock tips, or death threats, please leave them in the comment section down below, and I will get to them as soon as I possibly can. If you guys enjoy the content, as always, please, wow, that was kind of weird. If you guys enjoy the content, follow on Twitch or DLive is always appreciated. And you can like or subscribe here on YouTube, of course. If you guys are interested in improving your trading situation, I've got multiple guides, multiple courses, some free, some paid. You guys can check them all out in the description down below, or get involved with our premium trading group if you guys would like to trade with me on a daily active basis. Many ways to do that and get involved with our community. Other than that, everybody trade safely, treat your neighbors with respect, make sure to tip your waitresses, and I will see you guys tomorrow. Trade safely.